Hello, everybody. Happy Wednesday indeed, BlackBerry. Happy Wednesday, Leo. Happy Wednesday, TC. Happy Wednesday, Joe. And happy Wednesday, Michael. Thank you all for showing up. Let's get into this. Today is actually a bit nice. Hello, Mike. To those who are more bullish, at least on the front of some assets. But if we're objectively going to look at the market, again, the only one that is really having a decent day is maybe Nvidia, Google, Amazon, a little bit here and there on Adobe. We have Oracle, CRM having quite a blast today with 10.7%. So there are some green spots here and there, but if we are, more so those who are especially here for Palantir can see that Palantir is bouncing up and down again from that 67.12 as predicted. It still is within the vicinity and locked to that range. Are we able to see any more serious progression with it? To be frank, it actually still looks tremendously bullish, although scraping the top of that channel for quite a while on the daily. It is completely over stretched, it's insane amount beyond the shorter range channel and slower channel rather, and more so we still have tremendous gaps to close. So again, those of you who are in Palantir, read this as you will. Remember, this is not financial advice. I'm just going to tell you that this is not smelling good at all. It smells very burnt, if you will. Yeah, that's about that. But let's tackle our usual suspect, the S&P, which we care about the most. Why? Because, well, at the end of the day, whatever we're going to see that's going to happen with that beautiful thing is going to dictate everything else. We still have a decent gap right here to close. We are right now at the top of this median that is moving through the wider, slower channel, as you can tell, but we are slowly starting to deteriorate for that for the day. I believe since we have only about 30 minutes, less than 30 minutes, 28 minutes left before pre-market, we really are not going to see too much action. Action might happen overnight, if at all. We are again on 30 minutes, somewhat bullish, squeezing that lemon to its final juices, which is tremendously crazy. Again, those who know and follow the market understand how irrational this is. If we're looking at the current channel on the 45 minutes, we're actually scraping median for quite a while. The top actually potentially allows us to move towards around 6112. Specs even worse than Gus. What? Then I guess. Okay. Oh yeah. I guess. Yeah. I see. Or well, it smells like doo-doo. It smells like it's been burnt and smells like burnt toast. Yeah, let me fix the chat. I have it a little bit smaller right there. It's kind of annoying. Hold on. All right, now that should be better. But yeah, no, it smells horrible. It smells like it's about to. It smells like burnt toast, basically. With that in mind, again, we're looking at S&P. S&P right now, although already squeezed up to the complete and utter ceiling on the front of the 4-hourly, which is almost like looking at the daily. It is almost, but not exactly. I would argue that this does not have, it's not going to be long lived. We are, again, the idea was that we will see breakdown over here. The market was able to push forward. It's going to be scary if we're going to have a third impulse. It's going to be just a horrible idea. I would not love to see that. It will take a lot longer. Objectively looking at the 1 day, we are actually horribly bullish. This is just screaming up. The market is ready to go bananas all the way to the ceiling, which is 6,200. Those of you who know, we have a bit of an issue starting to happen at 64, but really those who are more aware, although that doesn't make sense because you don't see really the channel, 6100 is the scariest area actually, but you don't see that on the chart. But let's not address what we're not seeing. Let's address what we are seeing. We are seeing the weekly trying to break out into overbought territory, potentially, hi Lydia, giving it more momentum and actually squeezing the leftover of what we just said, 61, 69, kinda within that vicinity, 69 6170, call it, just to be more precise. That appears to be the actual potential destination based upon this, if, and I repeat, if we see this break out into overbought territory above the 80% range right here. Now, what is the monthly showing? The monthly is actually as disgusting as it was before, nothing new. We're just kind of creating a new candlestick that is still above the channel. How abnormal this is, very much so. I will remind you, the last time we've been on the top of this channel was around pandemic days, and since then, immediately when we got in that area, we scraped it for like 3 months and then ended up breaking downwards, inwards, all the way to COVID bottom. Now 3491. Why is that number so important? Because my suspicion is that the market will break below that point. And you're like, Greg, that is 50% retracement. You're crazy. Let me just remind you of this one little thing. Back in the day, if you're going to look at the chart in the middle there, you're going to see in the housing bubble, the housing crash, if you will, the prime real estate crash, we had a 50% correction on the market. Now, I've been touting this little thing for quite a while, and I've been warning that, gentlemen and ladies, the market can break far worse than you can realize. And by the way, on the dot-com bubble, if you realize, it actually broke 51%, which is, again, above that 50% mark. And really, if it's going to be gradual will take, let's say, in the first year we break, let's say 10%, 15%, maybe even 20%. And then on the second year, we maybe gradually climb a little bit higher, climb back up 5%, let's say, but then we break down again the rest of the way. So completing sort of the process, it will feel or will appear as if we started late, just the same way it appears on the dot-com crash right there when we got the 51% correction. And I would argue that this correction is going to be actually rather deeper, because if you're following technical analysis and the cyclicality of the market, you realize that we are at the threshold of these 20-year mark since we had that proper crash, really. And usually that results in a longer process that is, that's recognizable on the technical front of things, on the cyclicality sort of side of things. You can actually see how that cyclicality repeats itself. Oftentimes people are seeking for it to be precisely on the 20-year mark. That doesn't how things work in the market. The market does not get things so precisely, simply because that will make it too predictable. More so, that's when we say the market, it is us, the people, and the institutions, and everything all together, really. And it happens not on a particular point in time, but rather when, after a duration of period of time, when we're talking about the regular human lifespan, and when people are starting to withdraw money, take profits out, and if it coincidentally falls in line with a potential correction, you're going to see a wider profit taking that will result with a lot of fear and sentiment that the market is going to crash and subsequently result with a collapse. That sort of this snowball effect. But it has to start from somewhere. And usually it starts coincidentally in the end of cycles, exactly where we're at right now. To understand cycles, you need to understand technicals better. But more so, you can actually see these cycles actually also fall in line very neatly when it comes to the channels, right? And if we're looking at our yearly chart, which is the scariest one objectively, so yes, to close this candlestick, we're still 27 days away, right? And when this candlestick gets locked, we will be far more objectively looking at sort of the cyclicality, the procession of these cycles. And if these cycles are correct and are as perceived by myself and other technical analysts, that we are at the cusp, only at the beginning of a correction. Like, Greg, but this could pivot back up, right? It can. But with these results and this structure as is, we're far more likely to open downwards rather than to be able to correct upwards to force this to the upside. The rally on the S&P will have to be so enormous that will go out of any proportion. We're not even talking about that range of 7,384. We are talking about numbers that are basically insane, right? We're talking about the 10,000 and above, and that is just not realistic, if you ask me, based upon the cycle, where we are in the cycle, and the technical analysis that is kind of showing that, well, guys, we've squeezed the bejesus out of this lemon. And in fact, it's kind of ironic how much further this we were able to push on the 3-month chart, on the quarterly chart, because this quarterly chart should have been, or at least from my point of view, based upon how the cycle will be, already breaking down. But as you can see, with this artificial pumping into the market, with the exuberance, we were able to push higher, right? Does that mean the cycle changes? No, it doesn't. It simply will make a bit of an abnormality, the same way the market did that many times before. This is nothing new. And those who know, there are other far more efficient tools to actually recognize these things. And it's going to be very complicated to explain, by the way, which brings me to my very important plug that I now have 4 spots available. They will be filled by the end of the year, or throughout the 4 next spots, whoever takes, first come for first served, right? We have this wonderful promotion that I have decided to do for the end of the year, to finish the year on a strong note. So those of you who will sign up to the One-on-One Academy basically will get 20% off, resulting in a price of $2,000 instead of $2,500, a discount of $500. Pretty neat, I would say. Only for the 4 spots that are available right now, or until the end of the year, whichever comes first. I have a suspicion that the 4 spots will be filled first. So to know more about this, reach out to me, DM me on Discord. We're going to have a bit of a Q&A. I'm going to answer your questions, and if you like it, we're going to continue. By the way, thank you very much, TCC, for liking the video. I appreciate it. Shit, I forgot to show it on the screen. I'm a fucking moron. It's brilliant. I'm a freaking moron. I'm a moron. Well, now that you got to stare at this, and I will show this again, here's the promotion. You can find it on my Discord or on Tom's Discord. Tom's Discord? It is, yeah, ignore that. That's our music channel where we post all sorts of cool music. Was posted earlier, reposted rather, by Tom. I don't know where it is anymore. Everything gets buried. I think Tom has also a really cool discount on his academy right now. Right now. Oh my God, it just got buried somewhere. It got buried. Oh, Sasha, yeah. Must feel bad. I mean, even I was smart enough to ride the vast majority, or at least a decent chunk, back and forth on Palantir before I said, guys, jump out. Or at least, no, I didn't say, guys, jump out. Let me correct that. I said, I'm, jumping. I sold my, when it was Tesla at 300 and everything. And I said, guys, you do you, but that's what I'm doing, right? Oh my God, I don't even know where it is. It got buried. Anyway, I'm gonna search for this. We that will be simpler. That is the promotion. If you want to, reach out to me, and we'll get this settled. For now, let's continue. By the way, Patreon allowed me to open annual subscriptions. So those who want to subscribe annually instead of paying every month and get a discount of 15%, go ahead, subscribe. Now is the time. That's how you hang out with us on the Discord on a daily basis, and all sorts of cool perks like weekend hangouts and technical analysis that I provide in the Tickers channel, and all sorts of cool stuff. All right, I think that is it. Cool. Plug done. Now, let's go chat. Finally, I get to the chat. Hello, smelling, I guess, yeah. Hi all. What's up? I made it. You lovely people, make sure to like. Absolutely, I would appreciate it. Howdy, Casey. Ori Dekel, good to see you, my Israeli brother. Why such pessimism? There are no hints in macroeconomics for this. Are you sure, Ori? I mean, I'll be glad if you actually, since you are a member, join us on Discord and make your argument. Now I will make mine, and I will show you that we're still... First of all, the supply chain is broken since COVID. We have never... macroeconomics do not just... I see what you're saying. I think I misunderstood you. I think I have a suspicion that what Ori is saying is that if you're objectively going to look at the macroeconomic conditions, they do not justify such a rally. Nor a rally that will be even over that top to justify the current rally because, well, you have to be planning to sell at some point, right? You're not buying to lose money. So I suspect what OE is saying is exactly that. I have a suspicion. Unless OE really thinks that the macroeconomic conditions and the geopolitical conditions and everything all together are not worrying at all, nor inflation, nor Tom Lee. That does the okay. If you want, write on Hebrew. I will understand. I will talk to the point, but it doesn't tell me a lot. Tom Lee, Tom Lee. Tom Lee, I will tell you, by the way, secretly, when we were at COVID bottom, I was the only one person who was technically justifying. Tom Lee was, I think there will be a rally. I don't think it's going to last that long. I was showing technical analysis and actual precise numbers, and I was off. You still can find my video on my channel since back then, justifying technically why the bottom will be what it is about 2 months in advance. You can ask our Tom Nash that I was actually telling him about that precise bottom 4 months before the bottom ever happened, and I ended up being correct. I mean, you can say it's a, mystical coincidence, but then again, very accurate, I would say. It's almost like, I'm not even going to say. And my video is still up, and I didn't even know Tom Lee was saying whatever he was saying. I was just too busy with managing, building the community myself, doing my own analysis, my own life, whatnot. If you remember back then, it was a bit hectic, so I was a bit busy myself. But Tom Lee does not tell me a lot. You need to be more precise, my brother. And it's okay if you disagree with me. It's absolutely fine. I'm just presenting. More so, when you disagree with me, you disagree with my reading out of the technical analysis. The technical analysis is what it is, right? Numbers are numbers, right? We can agree that now 1 + 1 is 2 on all languages and in all countries and everywhere in the universe, probably. Then again, we can argue whether 2 is a lot or little, right? That's a whole different argument. But then again, I can tell you through my tools here that you can see, and as you are accustomed to probably watching Micah, you know that a person who applies the technical analysis tools correctly, they will result in very particular numbers, right? And these end up being very accurate and are dictated by cycles that came before we ever even existed, really, some of us. But yeah, so that's just, I could maybe misassess or misunderstand the momentum or the potential of the momentum. Absolutely can happen. But again, when it comes to analyzing the tops, the highs, the lows, the bottoms, the checkpoints, if you will, I am rather accurate to the, again, ask the viewers, the older school here. So I would argue that the points are accurate. The question is whether it is actually possible that this momentum will be dragged out. Again, there are many more tools that I do not show here, and as you understand, some of them are very, very complex, and I'm not just going to show something and try and pretend that it's understood by the vast majority. That's why I try to use Stochastic RSI, which is a rather simple tool, and even that I emphasized many times being misunderstood and misinterpreted. So we are using it to the best of its ability to show us the short range projections. In reality, there is a far larger cycle that could be measured very precisely. You can ask my students here in the chat. I hope some of them are here and can tell you exactly how accurate, pinpoint down to the cent accurate, can these cycles be calculated and found out in terms of their supports and resistances. And again, you will know. And then the only thing that could be misinterpreted is the momentum. When it comes to momentum, I will argue that sometimes certain limbs, certain technical structures could be stretched further out. It has to do with how we count particular partitions in that cycle. Those who know exactly what I'm talking about. And these partitions end up being usually very accurate. Usually, in very abnormal times, does not apply, especially in nowadays time, simply because the market is very exuberant, very irrational, and more so unjustifiably misled, I would argue. And I think soon our CPI numbers, jobless claims, the new job openings, all these numbers that now everybody forgot to pay attention to will become tremendously important again, and we will be potentially looking at inflation hitting back with a second wave. And if I'm correct, that second wave will be horrible. I'm not even going to talk about how prices are already set right now. Everything is about 4 times more expensive. If you really want to be objective, how much you have to pay to get the same amounts of product, right? To pre-COVID to right now. And again, it is to draw it in crayons, right? If you get fatter by 20 kilos every year, right, and now on the 5th year you're finally not getting fatter by 20 kilos and now you're getting fatter only by 10, it's not something to brag about. You're still now a fat ass that cannot fit through the door. You need to go negative for multiple years to fix that, unless you are willing to accept that current pricing will become norm. And that is not really sustainable. Why is that not sustainable? Because salaries did not hike as quickly as inflation did. In other words, our salary does not provide us with the basic necessities that we needed before, and our money is slowly running out. And you want to see that? You can see that through the consumer confidence that appears to be very, very, very strong right now. But if you look into the deeper numbers, you'll realize that everybody are slimming down, cutting down. I spoke to many experts in the real estate sphere in the US, and they are horrified at how expensive materials are. Now, yes, lumber broke down somewhat, but then it went up again. And now I speak to these experts. The only houses that are being bought are only the ones that are basically people who had to buy a house during COVID and couldn't no longer wait back then, and now postpone the whole process as far as they could. And now they are buying simply because they have no other choice. Something that has to do with, everybody has their own life. And yes, of course, some people are doing quite well. The stock market at face value is doing well. But remember, what will happen, that all these people are right now sitting on debt, accumulating debt, buy now, pay later services, you name it. Chipotle or something is opening a subscription service. I'm not gonna, that sounds good at face value, but that is actually the sign of the times, if you will. There are many signs again, and you can see them actually in Israel as well, and where I live and you live. We can see that everywhere. Hello, Danny. So again, being objective, and this is just part of the equation. Nobody is speaking about the fact that oil has been sitting at what we normally consider high highs, right, within the range of the 70, and experts that normally would scream their lungs out, sell at around 70, now telling you buy at 70 as if it's the bottom. And the projections, and again, just the other day I posted on Discord a bit of a conversation about by Jamie Dimon about crypto, about BTC and so forth. But I'll remind you that Jamie Dimon usually ends up being wrong, not wrong, and right on these sort of things, even though he appears to be wrong temporarily so, because we're going lower, right? And in the long run, Jamie Dimon appears to be far more often on point in the long run, right? When we actually objectively can look at when these things sort of play out. And well, the sad reality that last time he said oil will go to 150, we went to 130. So sure, this process can prolong. Can you understand and imagine how this will affect the global supply chain, manufacturing, the global economics in general? Oil is everything. When people don't often like to say and mention how Nixon decoupled the gold from the dollar from the gold in 71, but everybody forget to mention how it got recoupled in the future afterwards. I think it was 70. I don't remember when it was, but was subsequently recoupled. But really what did they do when that transition was taking the dollar and coupling it with the oil. So you then came up with the petrodollar. And the petrodollar, in other words, you can say the energy dollar. And the energy dollar, buddy, we all understand. Even if you grow bananas, make cars, or whatever service you provide, right? Whether you do it through the internet or whatever, however you do it, as long as you don't do it through a delivery pigeon, you probably need electricity. and you need energy. So everything comes down to energy, and energy in our day and age still is mainly oil. When it comes to raw materials, when it comes to plastics and everything, and when it comes to gasoline, it still is oil. So, and I'm not even going to talk about the expenses that we have about maritime shipping right now, and how the Red Sea is still closed, and then subsequently the shipping has to take longer. Longer is more expensive just due to the expense of the voyage. I'm not even mentioning insurance that is more expensive due to the voyage being longer. Now you have to insure for more expensive prices, let alone these being expensive for all along. And well, again, this instability creates a further steeper price as we go, and that's why, by the way, people in Israel noticed how more everything is more expensive to order from Amazon. No, yeah, no, not everything comes from Amazon from the U.S., especially in our case. Let's be frank about this banana, and how everything takes a lot longer. Honestly. Well, actually, it's kind of stable, I'm not going to lie. We've established new supply routes, but this is unstable and is still taking away 16 to 20% of all the products being supplied through the supply chain. 16 to 20%. That's a lot. That is a lot. Instabilities in the supply chain, geopolitical instabilities. Again, I'm not going to. Israel and its forefront war, the thing that we're having right now, it's hilarious. But again, everybody's still looking at Ukraine, Russia, which is still important. Everybody thinks Trump will go into the White House, into office, resolve all problems within the weekend as if he has some magical fairy dust in his pocket. That's not how things work. More so, if we really are going into a deflationary period, right? Recessionary period, to be more simpler, which we technically should have been all along. It's just that the Democrats pulled off a shtick right there and had to, force a change of definition. So we truly are not in a recession, really. Buddy, again, look around yourself. Look at the prices. You are paying 4 times the price, not even to get the same amount of product. At the end of the day, that is the main sign you're looking for. That actual CPI, that actual inflation. Right? So with that in mind, I don't know. And this is just part of the thing. Again, Trump's policies over certain things are more pro-US, but they do not help resolve geopolitical tensions and instabilities around the world. I'm not even mentioning China. I mean, people literally forgot about Iran, North Korea. It's as if none of these messes are no longer there. I mean, guys, we are in the most unstable time we've had in the last 20 years. Let's just be honest and acknowledge it, right? And we can see it on all fronts. So, I don't know where, again, that depends on the argument of what you're seeing. At the end of the day, remember, this is not financial advice. It's just my mere meandering sort of point of view on things and analysis, and I could be wrong. Even my analysis could be wrong. You do you. At the end of the day, nobody will manage your money, nor will give you advice better than you yourself to yourself. Pretend you're giving advice to your kid. That'll be the most efficient thing you can do. Yeah, I know this looks insane, but that's still the prediction, boys and girls. Nothing has changed. I'm sorry to be very, very consistent, and it has nothing to do with me, but more so with the technicals. And remember, I'm not showing off everything I'm seeing here simply because it's so complicated. Most of it is misunderstood, and well, part of it is actually part of my academy, my IP. Pardon me. Now, questions, boys and girls. Questions, stickers, all that great stuff that we usually do. Now that I finished my rant. And this is, remember, what I'm presenting is just my point of view on things. At the end of the day, we don't judge here based upon how I feel or think about things. We judge here things based upon what the technicals are showing. That's, at the end of the day, what we're following here. Yeah. Ori Dekel, you are our member. You can join me every day, brother. I'll be more than happy to speak with you if you want to on Hebrew, if you want to on English, if you know how to on Russian, and I'll explain it and I'll show you. I really don't mind. Again, we're having a blast. In the last several meetings, we had quite a blast. In fact, the last hangout, I was planning to postpone it because, well, it got so late and we finished, Tom's Zoom and everything, and it ended up being actually a great hangout. So yeah, I mean, and I'm there on a daily basis, usually around market open. If I don't have students during these hours, I'm gonna spend time there as well. So feel free to join in, speak to me. I'll be more than happy to show you things and that I don't necessarily show here and explain actually. Yeah. Walter, appreciate your rant. No, Walter, it's just my opinion. This is what wasn't even the full rant. If we're gonna go, like, if you want to know, there's another important key part to it, which is the generational part. And you're like, Greg, what are you talking about? Well, look, every time, look, recession is not unsolvable. Recession is unpleasant, but it's not depression, right? And honestly, you can actually solve. How did the US resolve or solve recessionary periods back in the day? Quite simply, people put up their sleeves, went to work, shortened their spending, cut their spending, right? Ran after their kids, turn off the lights, don't forget to do this, don't crank the dishwasher every hour, just wash by hand, do this, do that, all sorts of things, right? But mostly they worked stupid hours at hard jobs, and they were not whiny bunch of kids. Current generation is that generation that is required to put their sleeves up and go to work, and they're the same generation that are whining about a 5 day week work and work week, and it's almost as if we know what is the medicine to recessionary times. I mean, we've done it before. The US done it before. We as people, you guys as the Americans. Now, the problem is that the Americans had the material, the ingredients to create that medicine. The ingredients right now are short in an amount. We don't have a lot of the good ingredients, if you will, the potent ingredients, and even those that we have are kind of half-ass. So what I mean by that, because what requires is a generation that is able to go do manufacturing jobs, bring back manufacturing to the US. Some of these kids are so lazy, they don't want to work at all, basically. They just want to YouTube and all sorts of things. I mean, YouTube should be set on the merit that you have some skill, some knowledge, and then you bring it onto YouTube. Not like, I want to be a YouTuber and let's see what I'm going to be doing YouTube about, right? I first worked in the industry for, years on end and learned literally dusk till dawn until I was able to actually have substance to a channel, and how difficult it is. But apparently, again, people strive to just, cut in line, if you will, and get to the point where they just have a vlog on YouTube and something. That's what they want to do. That's not really too productive for society. Let's be honest. Well, I mean, look at China. They actually have a big problem with these sort of issues. Everybody wants to be a YouTube creator, a social influencer, it's sort of nonsense. What happened to the cowboys, to the farmhands, to the people who really made things? And when I say made things, I don't mean art. You want to do art, do it in your own free time. Go work on a production line, make things, make society progress. We don't have people do that right now. People right now are whiny bunch of pricks that are crying about whether they're a boy or a girl or a dolphin or an octopus. They are not even sure. You want them to work hard? They're not certain, what year this is and what moral values, and half of them don't even have a moral compass. You really expect them to come up with common sense? Come on. I mean, again, when we're talking about what required the people to do back in the day to solve these sort of problems, it was possible. Now, the question is, are they even capable? Because what, are you asking for the people who now finally got to retirement to go back to work another decade to save the economy? I mean, I would understand the frustration of these people saying, hell no. Honestly. So it's not a rant as much as it's just objectively looking at conditions and asking yourself, do we have the current necessary conditions to solve the problem? And then we look at technicals and we say, what do technicals say? Do we see fundamentals and technicals fall in line together to sort of hint at a particular outcome together, not separately. And if we're objectively going to look at what technicals are screaming, if we're going to objectively look at macroeconomics, if we're going to be objectively looking at fundamental conditions, buddy, we're not doing well at all, and it could get worse any day now. And in fact, now finally a lot of the masks will be removed. Rob Guerra, they want you YouTube star like you. I'm not a YouTube star. I'm a nobody. Again, my I was convinced to open a channel and start this whole thing, and I really find the benefit and the joy in it, and I really do enjoy it, as you can hear. I mean, I really enjoy the ability to converse with people, whether like-minded, who agree, disagree. Doesn't matter. You can disagree with me. It's fine. The world is not going to end because we disagree or change because of that. Real change comes about when people actually take action. And today's younger generation is not capable of taking action. So I'm not that worried, right? But I am worried because this young generation is, in that sense, is the one that is required to be the material to be the solution. And if we're looking at inflation, which is the thing that we're all hurting for, no one cares about, half of us don't care what's going on in Ukraine. You wake up in the morning, you open the window, there is no Ukraine outside your window. There are no missiles flying around. Half of us don't live in Israel, don't give a flying fuck about what's happening here. Let's be frank about this. But you know what? All these things that are far away do take effect. They do take a toll on the global scheme of things. And believe it or not, the US is not doing all that well either. Like I said in crayons, the US inflation right now is a fat ass that cannot fit through the door. You need to go negative for a handful of years just to balance things out, to go to actual true 2% inflation, not that pseudo bullshit that we're having right now, that we're pretending that we're not at 6 or 7. Do the math. We're at 7% inflation easy. On some fronts, we're at 9 still. How are we going to resolve that? Magically overnight? By pretending that's not the case? It's like ignoring it's like that child who stuffs the closet with all his toys and hopes mama will not open the closet. Eventually, when that closet will blow up out, you'll have to deal with the outcome one way or another. And if you're objective, conditions didn't change all along. They were here all along. I'm sorry, Rob, it's not me. It's just, it is what it is, I think you and I spoke enough for you to know that I'm just presenting things, and I'm definitely not some star or some important figure. I'm not trying to be a talking head. I'm just having a community, a community of people, and maybe even just wanderers that jump in and out sometimes that want to converse. Sure, I love that. That's part of what I used to do at work, right? It's fills in the space. I do miss the Cisco Kid show. I have no idea what you're talking about. You're completely right, Greg. We need good people that work hard. Those whiny people just drag the overall population down the drain. Absolutely. A society is as good as its worst part, just like a computer. Even if you have all the best parts in the world, right, but your power supply is not able to carry all that, well, it's not going to work. You have the best engine on the planet in your car, but you don't have wheels, well, boo-hoo, buddy. Or if you have inappropriate wheels, the drag will throw you over or something. You'll end up in an accident, rather than actually come and be able to use the potential of that engine. In other words, society right now, honestly, if you ask me, is not properly suited the same way it was suited in prior years and prior recessions to actually fix this. The same way. And I understand why Goldman Sachs are looking at the lost decade. And by the way, reminding you again, if we're looking at the dot-com bubble, or again, correction, crash, whatever you want to call it, doesn't matter. The whole process that we had in the 2000s, right? All of it, all together, took a lot more than 10 years. It doesn't matter whether you bought at the top, at the beginning of the thing. It took you roughly between 13 to 14 to 15 years to break even and maybe see some profit. That's not a decade. We just call it the lost decade because roughly on average, these sort of cycles do take about a decade. They can be 12, 13, 14, 15 years, 8, 9, 7. Doesn't matter. The average ends up being around 10. Talk to you. Appreciate it. No, Rob, Thank you very much. I appreciate that shout out. Again, it's just since you raised the topic, why not? I don't shy away from talking about the unpleasantries, the things that are unpleasant and there, right? By the way, that secretly those who now stayed all this long now that know that there is that 6100 retracement level that I'm talking about. It's not that strong. That's the weird thing. I don't know if it will even able to hold because it's just not based upon a it's based upon a recent cycle. It's not a strong resistance. And the only one we have afterwards is 6407, and I doubt we have momentum to get this far, honestly. So my perception is we should be stopping here, but then again, this resistance is rather weak. We do have a combination of a couple of other forces within the vicinity, but still they're not all that strong, let alone we have 6100 flat when it comes to psychological, but still that is not that strong. And looking at momentum, especially when it comes to the monthly, understanding that these processes, just guys, let's look at this from an objective standpoint, right? Even if we're gonna do a short range correction, right? That takes 212 days, not even the full thing. If we're gonna go for a full length correction, on average, right, we can look at 456 days, right? So that's a year and a half already. So, and we haven't even started yet, and that's on a monthly chart, and you really have to be blind not to see it. That potentially that would be the result, right? Look at this. And I'm being generous. Remember, the same way we can take it a long time on the overbought area, we can take it a long time on oversold territory. Check this out. Again, 640 days. Here it is, if you have any doubt. Every time we go through an actual correction and a down cycle, these things take a long time. I do believe that with Trump at the helm, things will get better quicker. I really do think so. But he's not a magician, nor does he have fairy dust in his pocket, magical fairy dust. And I'll remind you, by the way, boys and girls, last time we've been testing that channel, I'll remind you again, last time it ended up very miserably. And I would argue that if based upon the technicals, this time it's not just going to end up by kissing the bottom of the channel and, we're done and dandy, right? Here's the channel. Here it is, right? I don't think it's going to be done by simply going downwards, fixing this, and remember it's going to have entanglement right here in the median, probably making this wedge. So this process is long term, boys and girls. Get ready, strap in. It's going to take a long... Ellen! I love you, brother. Good to see you here. This is going to take a long time. Only 9 likes, guys. Come on. Ellen, I absolutely agree. Ellen, what is this? Guys, come on. Boys and girls. Make the rest dislikes. No, please don't. That's gonna be not nice. That's not gonna be pleasant for me. Ellen, I love you much. You're a true brother. Thank you very much for pointing this out. I tremendously appreciate you. Pum 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 pum. All right, so that's my rant on things. And 11:11. Good time to come. No, Emil, good to see you. Emil, we all know that the correction is coming. The question is, what is going to be the trigger or negative catalyst to initiate the sell-off? Emil, that's a wonderful way to put it. Absolutely. We don't know what it's going to be, and oftentimes it can be something very minor, like a little domino falling on a bigger domino and the bigger domino causing everything to collapse. It is honestly very perplexing. At the same time, we don't need much than just to say that profit taking, a lot of profit taking. Imagine that a single institution says, you know what, guys, we're done. We feel like the market needs to go for a correction. We're out. And immediately will trigger a potential breakdown. Usually then when these sort of things happen, we start to look for the cracks. People start to justify these things, and then we're going to notice all these things that were on the surface all along. We just ignore them because it was convenient, because everybody has a buying portfolio, and it's far nicer to see it go up rather than to be scared of what potentially could be happening negatively, right? I will shout out a lot of Better late than never. Absolutely, absolutely. No, guys and girls, I'm all grateful tremendously for the community and for all of you participating, joining, even contradicting, agreeing, disagreeing. It doesn't matter. This whole thing that we do here is magical to me. Honestly, it does not pay a single buck. I'm not gonna lie. YouTube is really not being too helpful, not nice to me right now. So far, it just takes a lot of time, and actually, yes, it does cost me so far rather than actually pay me. So again, trust me, boys and girls, if I didn't plan to make this something big and actually worthwhile, and I'm actually going to, consistently have this community join together and speak about these things and actually build a community around this. Open-minded people who can agree to disagree, can just straight up disagree. Well, it's fine. It's all fine. We're all adults in this industry, or should be at least. Big boys and girls, right? At the end of the day, we're not in a competition against each other. It's not who made more. Your ROI in percent can look one way, mine can look differently, but in amounts it can look different as well. But what I need to make and what you need to make can be completely two different things as well. We're not in a competition against each other. Remember that. It's not about who made more. And if we take the benchmark points, trust me, I'm ahead of a lot of people, miles ahead. It's like, oh, you're behind me. Yes, but I'm on the 20th lap, buddy. You know? And it's not about that either. It's not about being an investor or a trader. Really, what it's all about is you making out of this endeavor what you need to. That is what it's all about. And if you made your profit, you know what? It's okay to take some profits off the table. It's okay if it's not the entire position. It's okay if you DCA. It's okay to do my best. The only advice I can legitimately give is this. If you ever ask yourself, what should you be doing with your portfolio? Is a simple answer. Pretend your child, your kid, your daughter, your son walked up to you and broke down the structure of the portfolio exactly as you have it, and would have presented market conditions as they are, geopolitical conditions as they are. What would you advise your kid or son or daughter to do? Okay? That same advice you would give to your child would be that same advice you should execute. Because you would not, I would hope, not give bad advice to your, family member, child, whoever that is, father, mother, the person you care about. Create yourself as the observer, put yourself as a third party out of the equation, observe the situation from the outside in, and then discern what it is that you need to be doing. It is actually tremendously simple. That's the best and only advice I can give. And again, to sort of go and show you other examples of people who had to struggle far more. We are so, what's the word I'm looking for? We have it easy, right? I would advise those who don't know in the community. I highly advise. There's, by the way, a video by Patrick Boyle, Tom's friend, a great analyst, and again, well, right now mostly a YouTube figure, if you will, right, and a fund manager, and somebody who knows what he's talking about, and he made a brilliant video about Jesse Livermore. Jesse Livermore is a trader that used to an early day trader. We're talking about the early days of the market, and he was just phenomenal in terms of what he was able to achieve in his lifetime, what he was able to predict with the lack of tools at the time that he had. And I would highly recommend everybody to watch that video or just research Jesse Livermore and see who he was and who are these giants upon whose shoulders we stand upon whose knowledge we know what it is that we are doing nowadays. Okay, I highly recommend everybody watch these videos. Doesn't matter whether by Patrick or anybody else. Shout out to Patrick, legendary person, and a good friend of Tom's. And yeah, I highly recommend understand where the knowledge and the history that we all regurgitate and use in order to determine what it is that we're about to see or are seeing in the market right now, and see and imagine what it is was and how it was for them to analyze the market with the lack of tools they had back then. Sorry, back to the chat. Michael, what are we talking about? Michalis. I think the important thing at the moment is how long will take till that correction come, because if it will take another year, then missing the whole Palantir or SoFi run is not ideal. Absolutely. I can absolutely admit and say that I'm actually bummed out a little bit about missing out on Palantir and Tesla, but this is how it is. You're not going to catch them all. And on it, let me present this example. Let me present this analogous to you. Let's say we're observing a plane, right? And that type of plane, before it crosses a certain amount of flights, let's say 1,000 flights, okay? A particular plane, before it goes through 1,000 flights, it has 0% of crashing. You would obviously take a flight on that plane, right? Because, or let's say 0.0001, as most planes nowadays are, right? You would be willing to fly on that plane. But let's pretend a plane, once crossing that 1,000 flights threshold, goes from 0 chances of crashing, immediately goes to 80% of crashing. I bet you none of us will ever go and take a flight on a plane ever that crossed that threshold. And when we cross a certain threshold in the market, knowing in advance that yes, potentially we could be missing out on a potential rally, but what we are gaining, what you forget that you are gaining, is the certainty that you're not going to get screwed by a potential correction that is being hinted at by the technicals, the fundamentals, and everything else you see around you. So you see, again, you do gain something, and people oftentimes ignore that little gain, which that gain is what? Safety. And if the market does correct, which, let's be frank, in most instances that's what it ends up doing, guess what? Now, although you were not sitting on a perfect ROI like somebody else, but now he's crying that his ROI is down 60%, if not more, depending on the assets, depending on how risk on these assets were, right? And now, guess what? You're buying at the bottom. You also literally at this point probably buying twice the amount, or at least saving some of your capital. In other words, by the time this person breaks even again, you're already making your second gain. So remember, that's how I say, yeah, sure, I could be missing out some right now, but on the second lap from here, I'll be so much ahead it would not matter at all. But that is because I know how to apply technical analysis, right? And I know how to measure the thing. And honestly, even though I do know how to measure the things, sometimes we, the analysts, get things wrong. I mean, look at 2020 and the vast majority of Wall Street. They completely effed this one up. And even though I got that one right, it doesn't mean I will always continue getting things right. Or even, and more so, let me tell you this. If you will predict a correction to come at 6,000 and then it comes 6,000 and a half, I will see you as far more correct than wrong at the end of the day. I'm sorry, that is just the reality. There is a certain acceptable margin of error that we can accept simply based upon how the market functions. That's it. It is what it is. And sure, yeah, no, I'm not saying we should be sitting on the sidelines. Again, if the signs will point out that Greg is wrong, right? If my analysis is wrong, guys, of course, do what you think is necessary. In fact, if you think I'm wrong right now, do what you think is necessary. Don't listen to me. This is not financial advice. I repeat, this is not financial advice. Repeat, this is not financial advice. Okay, we're good? Good. Roger. Alrighty, boys and girls. Now I really am done with my rant. So I guess no tickers for today. Instead, we got a rant. Okay. No tickers, rent instead. No problem. That works. Whatever makes you guys and girls happy. So before we adjourn this hangout and live, let's close it on a decent note with a little plug to me. If you guys think I deserve one, don't forget to join patreon.com/investory. I think the Black Friday sale is still functions. I think you should be able to sign up for the first month for $1. No, it's not anymore. But yearly subscriptions are now opened, and I think you can now subscribe. And there are different tiers, but do not subscribe to the different tiers. There are different tiers. Do not subscribe to Super Supporter yet. Please don't make me close them. I will have to refund and headache and stuff and stuff and stuff. Founder, be a founder. Founder is good. That means even when other people will be paying $25 a month to be in the community, you will be paying still $10 and enjoy all the benefits. Super supporter is for crazy people who just want to throw money at me for some reason. Believe it or not, I actually had people ask me how can they support me more than with $10. That is really cool. I mean, I really appreciate every single new member that joined. Doesn't matter for $1, $2, $10, $5, $50, $150. All of you are the same in my book. Of course, I do understand the extent and the more difficulty of putting, sort of helping with more funds to the community and everything. I absolutely understand that. But I honestly appreciate every single one of you, and those who cannot afford to support financially. Guys, a simple like, which is free, or just coming here and being cool, like a cool YouTuber that I like to watch as well myself, coming here, joining the chat, participating is more than enough. This is like an amazing thing, and I tremendously appreciate it. Also, those who are patrons, please do join the Discord. This is where everything is done. Patreon is merely a gateway. Join us right here on the Discord, right? And hang out, and we're gonna have fun, and we're gonna discuss whatever, and I'm gonna post ticker charts so you can see and understand what it is that I'm seeing, right? And keep up to speed with the S&P, even if I'm dying or dead or something. I'll try to post even if I'm dead. I'll try to, cannot promise. I'll do my best. That's it. Join us. It's pretty cheap right now, I would say. With a lot of cool benefits like hangouts in the weekends and just access to me on a daily basis. Honestly, you can just come up to me and just ask me questions. Join into the open forum instead of writing love letters in the main chat and asking very complicated questions. You see me here every day in the open forum, just like that. Come in, say, hello, Greg. What about the sticker? You can ask the members. You can ask Mike here or the rest of the members. We do that on a daily basis. Check out the tickers and have a blast. So students and all that cool stuff, more to come because I'm working still on the notes for the students so they can catch up and have an easier time. Newer students can enjoy notes and all that cool stuff. So yeah, reach out to me about the academy. There are only 4 spots that will be given the discount, the $500 discount right now, and that's it. And yeah, see you in the community, see you in the hangout, see you, and you all have a wonderful evening, and I'll see you tomorrow. Yeah. Bye-bye, boys and girls. Thank you for your time and hangout. Cheers.